China's IPO market seeing a revival driven by some new AI names. The model maker Minimax reportedly set to price its Hong Kong offering tomorrow at the top of the range. Our Dear DeBosa has more on that in today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So China's AI boom, it's now showing up in the public markets, while the U.S. version, it's still locked behind private valuations. Minimax, as Carl said, this is an AI model builder. It's just the latest amid this absolute frenzy of AI IPOs in China. Just over the last few weeks, there's been more Threads coined China's answer to NVIDIA, up 500% on its debut. Another chip maker, Meta X, surged nearly 700% on its first day of trade. And then you have Baiyan jumped 80%. So now the pipeline is moving from chips to models, and it's not slowing down. You've got Minimax and Jipu AI also anticipated to list in Hong Kong soon. Their foundational model startups going to market early in the AI build-out. Now, the average age of those 6 Chinese companies I mentioned is 6 years. Now, part of this is capital. China's late-stage pool, it's smaller, and so IPOs are one of a few ways to raise real money over there. Now, compare that, though, to OpenAI, which just turned 10, or Databricks, which turns 13 this year. There's Anthropic and xAI, yes, they're 5 and 3 respectively, but even there, the message is cautious in terms of an IPO. Now, all of this matters because public markets, they don't just provide capital, they force price discovery, real-time feedback on how much risk investors are willing to underwrite. OpenAI is now one of the most valuable companies on earth by private valuation, but investors, they're left trading around it. They have to guess how much of OpenAI's value is durable or already priced in or circulating between the same few balance sheets. Now, that may be holding back the broader AI trade in America. Chinese investors, they now have a purer play AI trade that includes a new generation of chip makers and model builders themselves. That could be coming through in performance. The Hang Seng outperformed the Nasdaq last year by nearly 10 percentage points. And as the model race accelerates, guys, there is a growing irony here. Chinese AI model builders and chip makers, they're actually offering more visibility to markets, and that is a key point.
So I guess, and the other sort of interesting factor here was the acquisition by Meta of Manus,
yes,
which is a Chinese native, right? I know it's a Singapore company, but I do wonder if we're going to see more of this and whether there will be geopolitical implications at some point or intervention by either government.
That's such a great point, right? Manus AI was a Chinese company, and they moved everything to Singapore and basically cut off their ties with all of China. Now, Chinese AI startups, even though they've proved, really interesting and really robust in terms of performance, like DeepSeek and some of the other ones, Minimax, which I mentioned, the valuations are a lot lower relative to American AI startups, and that is because, as I mentioned, the pool of capital is smaller. So you had a Manus AI just really show you what you can get if you break off those ties to China and move to Singapore. You can get bought for much, much more. You can be valued at a much higher valuation. Will other companies do that? I mean, that's a really interesting question because you know that they also have the support of Beijing. It is a strategic priority to develop chip makers and model companies, and there may be benefits that come with that as well.